decentraLIVE. Welcome back. You've got a lock to decentraLIVE, the only crypto and blockchain news show that you need to know about. I'm Owen McCall.
And I'm Tracy Traxler. Now, today, Owen will be updating us on his ongoing love affair with John Mcafee, but we'll also...
You're getting a little far there. I don't know if love affair is the right angle, but I do like the guy. He's an interesting guy.
There's some serious affection between you two.
I guess.
Now, in the meantime, we'll also be taking a closer look at a recently released IMF report, as well as Libra's grilling in front of the US Congress. And of course, as always, we'll be checking in with crypto around the world.
Absolutely. But first, before we get to all that, we're going to take a look at the crypto markets. Let's see what happened over the last week. Here we go. Okay, so on screen for you now, the top 5 cryptocurrencies and their movement over the last week. We've got Bitcoin, Ethereum, XRP, Litecoin, and Bitcoin Cash up on screen for you there. Bit of a sea of red. We were up, we were down. This week was a bit of a wild ride, but here we are. Going to talk about it now. Bitcoin currently sitting at $9,811 US, down for the week 14.61%. Ethereum following suit, a little bit worse for the wear, down 20% for the week, currently sitting at $217 US. And Change XRP down just under 5% over the week, not too bad, sitting at $0.314 US. Litecoin down nearly 9% over the week, currently sitting at $92.65. And finally, Bitcoin Cash down nearly 12% for the week, just under that $300 US mark. Now, Trace, I'm excited. We've got a special guest today. We're going to get into a little bit more of the meat of these crypto markets. We've got Phillip Liñan from the Crypto Xpert.cx family. Phillip, come on down.
Owen, thank you so much for having me.
Looking forward to it.
Pleasure.
Tracy.
Thanks for coming.
Yeah, without further ado, let's jump right into it.
Let's look up some of the markets here.
Yeah, so first up, we're going to look at the king of crypto, none other than Bitcoin versus the US dollar. So we're going to look a little bit here towards the middle of the screen. You'll notice that this is when Bitcoin had its most recent rally, hit its peak at nearly 14,000 US dollars. And since then, it's just been in a gradual choppiness to the downside. So this is currently the overall corrective phase. And if you look here, you'll notice this is the most recent downtrend that we've marked. And, Owen, I've told you about this before. We talk a lot about at CryptoXpert.cx about technical analysis. If you look here, you'll notice that you have a clear rejection, resistance, and it comes back up down to support and goes back up. And interestingly enough, within the past 24 hours, the price has come right back nearly to that line and come up again. For those short-term traders that are looking for those quick little gains.
A quick pick-me-up, I guess.
Yeah, that's the way to put it.
Okay, so that's
definitely
what we're seeing here, a bit of a downtrend, but then a pop back up. Now, do you see anything? Does this tell you anything? You see that? What does it make you think?
So I don't want to get too technical right here. I'm someone that focuses on something that's called Elliott waves, and I personally really admire this current wave structure, but I'm not going to break it too much down because at the moment, I don't want to overwhelm your viewers.
That's good enough for me. Good enough for me.
But overall, I really like this. I'm not going to say that it's the end of this current corrective phase. This could currently go on for another month. We don't know. But before going for any long-term pushes to the upside, I want to see a clear break of this downtrend and perhaps retest just some consolidation, just a clear movement to the upside before we break the local top again.
Perfect. Okay, so that's Bitcoin against the US dollar.
Correct.
Let's switch gears a little bit. Let's get Ethereum against the US dollar up on screen now.
Yes. Ethereum, US dollar, another of the top 5, as you mentioned. So here in this example on this chart, we just wanted to give a clear example of a kind of uptrend. And for us, Owen, a uptrend constitutes of higher highs and higher lows. And starting here, you see that price starts moving up, have a corrective phase. Here we have a higher low. Buck comes back up, reaches its peak again, just like Bitcoin, and comes right down to another higher low. And this is our current uptrend that we're looking at, Owen. And as you can see, price clearly broke down, slightly consolidated, and then came right back down. And when price breaks that uptrend, Owen, and starts consolidating and slightly rejects at around this level as well, that is the signal to get out. or for the more daring, open a short. But each to his own.
Gotcha. Okay, now I just want to go quickly. Now this time frame we're looking at here for both the last 2 slides, that's the last 4 months or something like that. Is that right?
More or less, yeah.
Okay, perfect. So the trend has been broken. Time to get out. Speaking of getting out, let's get into Ethereum and Bitcoin now. Here's the crypto to crypto pairing.
Exactly. So essentially you can pair altcoins, cryptos, Bitcoin. You can pair it to other cryptos. You can compare it to US dollars. Here we're going to look at Ethereum, Bitcoin. Owen, if you could just gently point out at the very top that rally that we've had.
Right up here.
Yeah, exactly. That was the most recent rally that Ethereum, Bitcoin had. And as you can see, price very gradually and slowly started descending to the downside overall and came right back down into these key areas here. Now, what's interesting, and which is also a sign of, perhaps time to get out, is you saw at the beginning you have a very clear push to the upside. Price comes right back down into the level where it originally started here. But price continues to push up, and of course, as you can see, it's not as impulsive or not as strong as the one at the very beginning. And then it comes back down into the key area and then pushes up again, but also, once again, not as impulsive, not as strong. And that overall is a sign of weakness. And then once price clearly breaks down here, slightly retests, and then boom, the drop.
And you've got here a line. Now, why exactly did you do that? Just to show sort of the downtrend.
Yes, this is just a clear illustration of the current downtrend. Lower highs, lower lows.
Lower highs, lower lows. Okay, well, thanks so much, Phil. That was great.
All right, thank you, Owen.
See you again next time.
Next time.
Okay, there we go. That's the markets for you. A little more in depth than usual. What do you think, Trace?
I think it's fantastic.
Yeah, you and me both. Okay, now, I got to do it to him. You called me out in the intro, and hey, that's fair enough. Bit of a man crush, I guess. Well, I like a newsworthy man. What can I say? I can't help myself. So, more news from the big man, John Mcafee himself, this time doubling down in his predictions for the Bitcoin price to reach $1 million by 2020. He took to Twitter on Monday to lambast those in the crypto community who are losing their collective minds over daily or weekly price fluctuations. Here's the tweet, quote, "Bitcoin is in the mid-10s and people worry. LMFAO. Why do you pay attention to weekly fluctuations? Look at the past few months. FFS, it's rising drastically. I'm still positive about my $1 million Bitcoin price by the end of 2020. Now that's from John Mcafee himself. Now, some of you might remember back in 2017, he threw down the gauntlet, promising to, quote, eat his own dick on national television if Bitcoin does not hit the 500K mark by 2020. Now he's doubled down and jumped that number up to $1 million. However, still no word if more body parts will be added to the menu should his prediction fall short. Now, if like John, you too believe in the inevitable meteoric rise of Bitcoin, I've got some great news for you. There's now a way for you to get in on the action without actually getting your hands dirty in the crypto markets themselves. LedgerX, a US regulated trading platform for digital currency derivatives, has been offering institutional investors the capacity to invest and trade in crypto derivatives since 2017. Just recently, the company received the green light from the U.S. Commodities Trading Commission, or CFTC, to act as a designated contract market for clients of any size. This means that retail investors as well will be able to jump on board and start trading derivatives contracts just like the big boys. Now, interestingly, one of the most requested products on the LedgerX platform is reportedly a call option, and that is basically the pre-purchase of the capacity to buy an asset at a specified price at a specific time. So a call option for Bitcoin to hit 100K in December of 2020. Now, I guess Mcafee might not be off the hook, but still good news for the industry.
What can I say? The man is an enigma. Now, of course, earlier this week, the International Monetary Fund published a new paper entitled The Rise of Digital Money. The newly released 20-page piece anticipates that today's most common forms of money, cash and bank deposits, are set to face tough competition from e-money and fiat-pegged cryptocurrencies in the near future. According to Tobias Adrian and Tommaso Mancini-Grifoli, the brains behind the paper, central banks and policymakers alike will play a vital role in shaping the future of the emerging digital financial system, as the rules and regulations they set forth will usher and bear heavily on the adoption of the new digital money forms, as well as on the pressure new money exerts on commercial banks. Of course, we've already seen numerous international organizations issue statements, reports, and studies on the topic of digital money and its potential risks and policy implications. However, However, Adrian and Mancini's paper sheds light on the interplay between new forms of money and the traditional banking sector by breaking down the different models of digital money and offering a simple conceptual framework to compare and contrast the potential benefits, risks, and policy implications associated with each. Adrian and Mancini remained cautious regarding the stability of digital money, specifically pointing out that the standard deviation of day-on-day exchanges in Bitcoin prices is approximately 10 times higher than in most G7 currency pairs, and even remains slightly higher than in the Venezuelan bolivar to US dollar exchange rate. And yet, the authors acknowledge that the sheer convenience of digital money as a means of payment has seemingly ensured that cryptocurrencies and other forms of money will continue to garner popularity over the course of the coming years. Now, the paper discusses numerous new digital forms of money, including Alipay, Swish, WeChat Pay, M-Pesa, and stablecoins, but to no one's surprise, particular attention is paid to Facebook's controversial Libra coin. Interestingly enough, though, Adrian and Mancini classify Libra as an example of, quote, I-money, the equivalent of e-money, yet because it offers variable value redemption into currency, it ultimately functions as an equity-like instrument. Despite this observation, however, the authors do not advance an definitive view on whether Libra should be considered a security from a regulatory standpoint. All in all, it's safe to anticipate that this new IMF paper won't be the last as governments continue to grapple with the social, economic, and political implications of digital money.
This is deep stuff. No doubt we're going to see some more attention paid. Everyone's talking about it. Libra.
Exactly.
Yeah. Absolutely. Well, speaking of, it's now time for your weekly Libra update. David Marcus, head of the Libra project, has been put before a host of government hearings, U.S. government that is, this week, facing a barrage of questions regarding the launch of Facebook's so-called cryptocurrency offering. Now, Maxine Waters, congressional rep for California, started things off for the U.S. House of Representatives Financial Services Committee with a scathing reminder of the privacy issues which have plagued the social media behemoth for the last few years. She then went on to recap the Russian interference scandal and closed with a request for Mark Zuckerberg himself to come before the group. We then heard from Representative Sean Duffy, who asked Mr. Marcus about the openness of the system, including the capacity for those who have been banned from Facebook to take part. The answer from Marcus, a big fat, I don't know. Then we saw U.S. Rep. Alexandria Ocasio-Cortez take the mic and question whether it was wise to add the titles of payment processor and currency creator to Facebook's ever-expanding umbrella of service offerings, which now includes a publishing platform, an advertising network, a surveillance corporation, and content distributor, rather. Quote, why should all of these activities be consolidated under one corporation? Good question. Finally, my favorite, Congressman Warren Davidson laying the smackdown on the Libra project and claiming that due to the inherently centralized nature of the project, the Libra coin would likely be referred to as a, quote, shitcoin in the industry. Love it. Piling on the anti-Libra train, none other than President Donald J. Trump, who claimed the project would have little standing or dependability and reminded everyone that the U.S. only has one real currency, the good old-fashioned greenback. It's the best goddamn currency in the world, if not the universe, for that matter.
Debatable, I would say. But I think it's anyone who tuned in was definitely up for some good old-fashioned entertainment.
Did you watch some of the live coverage?
I did, actually, yeah. It was very, very interesting to see, them, I think, struggle mainly with the concept of how do we define Libra, right? Are you a bank? Are you a payment transaction service similar to PayPal? It was definitely interesting.
There's a lot of questions. And I mean, if you sort of go back in time when they're even talking, like some of these guys don't really even understand how the internet works. So to see them sort of grapple with this crypto stuff is a little bit tough. But we had mentioned before, one of the reps from the US had talked more specifically about the Libra token himself. Do you remember? Well,
he specifically talked about the sort of the threat of innovation and what it could potentially mean for the global financial system. He famously compared it to 9/11 as one of the biggest events of the 21st century, or potentially biggest events of the 21st century.
So Libra could be worse than 9/11.
That was sort of what he was hinting at. Yeah, it was an interesting point to make. But I think all in all, it was an interesting discussion, and I got to hand it to David Marcus for really keeping his cool under pressure, because he was fairly open about the fact that it is still, this was an early announcement. They're still in the early stages, and they're not, they haven't figured out all of the kinks yet, but they'll be making sure to cooperate with regulators as necessary throughout the entire development process. So
no doubt. We'll keep you updated as that story progresses, of course. Now, We talked crypto, we talked John Mcafee, we talked Facebook. Let's now look on the global stage. It's time for crypto around the world.
Let's head on over to Asia, where earlier this week, Shinhan Card, South Korea's top credit card provider, managed to secure a patent for a new blockchain-powered payment system. The Shinhan Financial Group affiliate has reportedly developed a blockchain-based credit card service. According to a company official, the newly patented system is equipped with several key functions associated with credit cards, including the ability to make merchant transactions, set spending limits, and make monthly payment installments. The service could usher in an era of cardless credit card transactions by enabling users to make payments using mobile apps. Now, of course, such a development would disrupt traditional card systems, which tend to rely on three intermediaries: credit card companies, value-added network service providers, and payment gateways. Now, Shinhan Card reportedly aims to expand its credit card patent to Europe, the US, Japan, China, Vietnam, and Indonesia in the coming months. Now, this latest development comes on the heels of reports from earlier this year that fellow SFG affiliate Shinhan Bank was actively looking to use DLT as a means of speeding up the approval process for loan products by utilizing a blockchain-based platform to verify qualification and certification documents that are required for credit lending. Now, of course, exactly when we can expect to see the patented technology in action remains unclear, but it looks like, in the meantime, it'll be a waiting game as Shinhan races to gain patent rights in additional legal jurisdictions around the globe.
Now, the blockchain-based patent game, that's heating up. We've got Visa, MasterCard in the mix. We've got, obviously, these Korean players here and tons more. I mean, HSBC going, tons.
It's getting crowded in there, definitely.
Speaking of crowded, over to India now, where a leaked document which local crypto lawyers and experts are claiming is draft legislation from the Indian government, which looks to place an outright ban on all cryptocurrency offerings, save for those tokens being part of an official digital currency, the digital rupee. Now, this is an 18-page document which bears the creative name, Banning of Cryptocurrency and Regulation of Official Digital Currencies. It was published online on Monday and is true to its name in being quite explicit about its aims. Here's a quote from it. Quote, "No person shall mine, generate, sell, deal in, issue, transfer, dispose of, or use cryptocurrency in the territory of India." Pretty straightforward. Now, Cointelegraph is even reporting that prison sentences of up to 10 years could be levied against offenders if this is in fact a legitimate document. The other main issues covered here is the creation of the so-called digital rupee. According to the text, the digital rupee will be issued by the country's reserve bank and would be approved by the central government as legal tender. Now, this leak has caused quite a stir from the global crypto community, maybe one of the most vocal being Tim Draper, who called the move pathetic and corrupt on Twitter yesterday. Now, if this leaked document is in fact draft legislation, then this move is just another in a series of what might be considered an anti-crypto themed tirade by New Delhi. I mean, we talked last week, well, you specifically, about India not being on board with Libra coming to play at all.
No, and exactly, we've already seen the effect that this has had on Facebook's decision by officially stating that they won't be launching Libra or Calibra in India at all, despite Facebook being, India being Facebook's biggest market. So it's an interesting choice, and I guess we'll have to see what kind of knock-on effects such legislation could potentially have.
Absolutely.
Now, last but certainly not least, famous crypto exchange Huobi recently reduced the supply of its Huobi token, the token behind its global ecosystem, as part of a quarterly burning event. According to an official statement, the exchange removed roughly 14 million Huobi tokens from a 310 million market supply. Now, this represents a whopping 116% increase from the previous quarter's reduction. Why the pronounced escalation? Well, an official statement released via the Huobi Global website credits the decision as part of a conscious attempt by the company to improve market conditions and sales growth. How exactly? Well, the move is intended to stabilize the currency and its price, as well as create an incentive for users to hold onto the token by curbing inflation. Since the introduction of the Huobi token back in early 2018, the Singapore-based exchange has routinely spent approximately 20% of its quarterly revenues buying back outstanding tokens. Of course, since revenues fluctuate on a quarterly basis, so does the amount burned. Starting on April 15th, Huobi held a series of 8 token burning events, burning a total of 21,356,800 1,500 Huobi tokens compared to the 6.5 million roughly it purchased in the first quarter. Now, the repurchased tokens are stored in a visible Ethereum address dubbed the Huobi Investor Protection Fund and essentially act as a reserve fund. The past quarter saw the Huobi DM platform garner an impressive trading volume of $504 billion, which the company attributes to rising membership numbers within the Huobi Prime and Huobi Fast Track programs via membership fees, as well as the general uptick in crypto over the course of the spring months. What's more, Huobi Group's founder and CEO Lian Li seems optimistic that the latter half of the year will prove to be just as lucrative amidst the onset of new developments and improvements to the recently launched Huobi Finance chain, as well as improvements to the high-frequency algorithmic API.
A lot happening for Huobi then.
Indeed, it'll be a busy couple of months, I think.
I think they're expanding operations quite significantly as well, opening exchanges in Indonesia, I know, and I think a couple other places around the world too.
Yeah, they're definitely growing rapidly.
Growing rapidly, great. Well, hey, that's it from us. Thanks so much for watching this week. We'll be back again next week to break down all the hottest stories in crypto and blockchain. You don't need to go anywhere else.
Exactly. But in the meantime, do make sure to check out all of our social media accounts to see what's happening behind the scenes.
Absolutely. Thanks so much. We'll see you next time.